Hi, welcome to this video day, which is on the 8th of December. We are on Sunday. We're just going to be looking at how to trade big Forex fundamentals to catch big trends and have the confidence to hold them. It's one of the best ways of trading Forex. Now, in terms of most retail traders, they'll just focus on technicals. You'll never catch big trends if you do that. Now, in terms of the trade we're going to look at today in relation to trading Forex fundamentals, it's been one of our favourites for many months. It's GBP CAD. Since we've got interested in it, it's moved up about 1,200 pips. There's more upside to come in our view, although there could be a dip, but that dip will be a buying opportunity. We'll look at the trade setup in a moment. Now, in terms of trading big Forex fundamentals, it's a great way to trade because you don't need big position size to generate really big profits. You just think in terms of percentages rather than pips, which I've mentioned in previous videos. Pips by themselves are just simply not important. It's percentages. Now, also when you're trading big fundamentals, you can avoid what I would call the time trap. A time trap catches most retail traders and basically causes them to lose. We'll discuss all of this in more detail now. Go to the chart, but just before we do so, please do keep in mind, it is my view as of right now. It can, of course, change in line with the market conditions and action. If you want all our trading techniques and our daily technical sentiment analysis of 14 Forex pairs, all you need to do is click on the link beneath this video and you will get live access to our member center. Right, let's take a look at the trade setup. GBP CAD, this is the monthly chart. Just want to go through the monthly charts very quickly before we get to the daily chart. In terms of trading big Forex fundamentals, how to set an entry, how to set a target. I also want to talk about percentage change as well, which I'll do in a moment. Now, in terms of this chart, here is the vote out from the UK to leave the EU, and we go down, okay, to the 160 level and poke through it, and speculators are positioned short for a hard Brexit. So it's discounted in the price, we bounce back. Happens again, we bounce back. They're all to varying degrees, of course. We bounce back here quite nicely, the nicest of those three. And then we come down here, and at the time we were saying it's a good trade to come off the 160 level because speculators are discounting a hard Brexit. We said at the time, chance of a hard Brexit, not great at all. They're very low, yet speculators heavily short. So we'll buy off the level and we'll come up, okay, quite nicely. But if there's going to be no hard Brexit, we should retrace all of this red candle. Obviously, you've got to manage the trade as it goes. Now, when we came into the trade, we're not thinking of pips first. We're measuring out the percentage. So if we look at the percentage change so far, this is no leverage in terms of our position, 8.7% to date. We can add another 9.2% if we get up to 190, which will give 17.9%. So when we're looking at the trade and thinking, we should retrace our Brexit decline, how big should our position be? We've gone 3-1. That's not a big position. Okay, not much risk on this trade. Current is 26.1. The target is 53.7. You've got to minus the carry off, which is a little bit obviously against us, but that could give us 50% on one trade. A few people have said to me, 26.1% on one trade, but it's taken 4 months. Well, most traders don't make that in a year. A very small minority make more than 50%. Okay, you're going to have losers along the way, but you want big moves. You want big trends. And it's a thing I think that's become very common in recent years with on the internet. I've mentioned this frequently, that traders brag about making 100 pips or say how delighted they are. There's no point in going for 100 pips. Your stop is going to be too close. Okay, you're never going to get any big winners. You need big winners to compensate for your losers. I think a lot of traders, they don't think in terms of percentages. They don't look at the fundamentals. I'm not doing anything complicated here. We'll go through the fundamentals in a little bit more detail in a moment. But just aiming for the big move and basically small position size yielding good gains. And a lot of traders I know in the Facebook group, and also who aren't in the Facebook group, nearly everyone who I know is a trader really loves this trade. I'm hoping it's going to continue to the upside. Now, in terms of, 4 blue candles effectively, where's the support? Well, you got support there. Okay, 170. That is a key support level. You've also got 20-month moving average. You've seen a big candle up into the 20-month moving average. It stalls, but this one clears it, and this one's getting clear of it. You can then draw a trajectory in there, which is the minor support. We'll go through these levels when we get to the chart. So that's the profit so far. That's the potential profit to come. What I like about this trade is speculators are still pretty bearish of the British pound. So there could be more speculators to get taken out on stop. Right, let's move to the daily chart. Right, GBP CAD daily chart, and in terms price action, obviously there's retracements along the way. Big trend is up, but despite that, the speculators still remain short, and we see this in the COT Net Traders Report, our favourite sentiment tool in Forex trading. If you're unfamiliar with it, it's from the CFTC. It gives you real money positions in the markets from 2 key groups: commercials, speculators. Now, commercials, they're smart money. They're 2.8 to 1, longs over shorts, so bullish. Speculators, on the other hand, 3.4 to 1, shorts over longs, so bearish, despite the big rise up. Now, in terms of any currency pair, there's obviously 2 sides to it. We've made the point. We feel the GBP is oversold on what was Brexit hysteria, and it's obviously correcting oversold. But on the other side, the market is still too bullish of the Canadian dollar, and I think that bullish sentiment towards the Canadian dollar is going to break. Okay, the overly bearish sentiment of the GBP is broken, but if we get the sentiment that's bullish towards the Canadian dollar break, then we're going a lot higher. Okay, just let's have a look at why the market is so bullish of the CAD. Well, it has got the best interest rate earnings of a G10 currency, so that's a bullish fundamental. The market sees no rate cuts coming until mid-2020. But that's discounted, okay, that bullish fundamental. The economy is slowing, and our call is for a rate cut before mid-2020. We think it could come in January, okay? Now, last week we did have the central bank, Canada. I thought they would be a bit cautious. They weren't actually. They held rates, which everyone expected, but they were pretty hawkish. They're pretty optimistic. They said rates are appropriate, but they're very optimistic going forward. And that's really bullish for the Canadian dollar, you would think. That's what the market was looking for. That's what the market got. However, there's too many people who are long on that eventuality that the Bank of Canada were going to be hawkish. Look at the candle. GBP came off its highs, but finished blue. And I was actually thinking, well, if the Bank of Canada can't rally the Canadian dollar significantly, then we're probably still going to keep going up, which we obviously did. Now, in terms of the Bank of Canada, they did say they were concerned about trade wars and will watch data. Okay, now the economy has peaked, and we said this. We did a blanket video on selling the Canadian dollar a few weeks ago, saying speculators are just too bullish everywhere on the Canadian dollar. The warning that the data is not going to be as good as the market expects comes from business investment, which is slowing in the Canadian economy. That's a leading indicator that the data is not going to be that great going forward, not as good as the market expects. For some reason, not a lot of people were looking at business investment. We got some data disappointment on Friday. Unemployment, 71,000 drop. Market expected, jobs to be added. I think that's the worst since 2008. And over the last 6 months, if you look at the bigger picture, no growth in private sector employment. That will concern the Bank of Canada. They're also looking at the bigger picture, global economy. That the outlook's going to darken. Trade wars, they're not solved. Global economy is slowing, could get risk off. That's all bearish for the Canadian dollar, in our view. So the bigger picture is, for speculators, I think, to just get out of Canadian dollar longs, not just in the British pound, but in other pairs as well. And that points to higher prices. So I'm looking for higher prices next week. No, I'm not actually. I'm a bit cautious. I think we could go higher, but I've got the feeling we could get a retracement first of all, which basically would be a great opportunity to get in to long GBP CAD trades. Why do I think there could be a retracement? Well, pound's been pretty firm across the board on the polls in the UK, showing the Conservatives probably going to get a majority. That's obviously bullish for the pound, and a reasonable sized majority at that. However, polls come out of the weekend, not quite so clear cut, showing Labour catching up a bit. I still think the Tories are going to win. However, you might see the pound come down a little bit, caution about the polls, if that makes sense. Now, in terms of this video, I'm obviously doing it 4 days before the election. We'll be looking at this obviously every day, British pound pairs. I'll try and do some more videos, and also I'll be doing my analysis in the member centre anyway. But dips in the pound are going to be buying opportunities. Now, in terms of if you're bullish like us, you keep the big picture in mind. If you get strength next week, I'd come in with a small position, okay? And then you can always add in on a retracement. But sometimes you don't get retracements in big trends. They're just flying up to the upside. So my view is that you put a small position in, and then you can always add on a dip. That's just my view. But in terms of, from our perspective, we've got our eye on this level. That's where we put our stop behind. Why this level? Because try and break out there, you can't. Bash into the number there, you can't get through it. Bash into it there, get through it there after trying to get through it and failing there. Blue finishes at the high, retest on the tail, then away. I think that's a good level to have a stop behind, and I can draw a double trend line there with a trajectory. So that's where my stop is. Now what happens if I get stopped out? Well, all I'm going to do is watch this 20-day moving average. If we're really bullish, we're looking after a significant break of the 20-day moving average for it to provide support. Support there, away should provide support. It's obviously dynamic, so it will snake up. But if we're stopped out from our position, we'll just watch the 20-day moving average. If we fall through it, just buy back through the level with a stop behind 170. If we go down towards the 170 level, which we've seen is a key monthly level, we would just key off that level, okay? On strength, if we went through the level, we'd probably buy back through it. From the long-term perspective, if we did dip and got stopped out, we'll be getting back in near enough the same price or a better price. So from the perspective of GBP CAD, a little bit cautious of a correction in the short term, the big picture in mind. Pound for us still going up towards the 190 level. If you just wanted to come in with a small position, if we're blue next week, that's fine as well. Keep your eye on the big picture. You don't need big positions. You can always add on the retracement, okay? Now, in terms of time, I think, traders, they spend too much time on the trading. Trading, for small profits, making a lot of effort. You don't want to be doing that, in my view. I said it earlier, bigger profits against your risk. And don't watch data. I think it's a big mistake. A lot of people will be watching the Bank of Canada or the Canadian unemployment number and looking to trade off. I wouldn't bother. My view's already set before those events take place. I've got my target in, I've got my stop in if I'm stopped out. I just let the market do its work. And I think, a lot of traders do this. They're always looking at price or wanting to, kind of trade in and out. And, for me, you just get sucked in. If you look at price too much, your emotions just get sucked in. You immediately get caught doing things you shouldn't do. You know, keep your eye on the big picture. You don't have to spend much time on your trading, and you can make really good profits. Yeah, I'm just a big fan of trading longer term. And this trade, yeah, it's a big move. Not too much effort has been involved. Well, no real effort at all. Against the profit potential that you can make, if that makes sense. I'm not sure. Well, I think you gathered what I'm trying to say. Losing my thought process at the end of the video. Sorry about that. We'll see how this one goes. I will do a general video on the GBP next week. Yeah, be pretty active, like I said, in terms of analysis in relation to all GB pairs. This isn't the only one we've got a few others as well, although this one does have our major allocation. Right, that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.